Hey guys, there's a great quote in this book by Steve Nison, Japanese Candlestick Charting Techniques. This is my 30-year-old worn copy that I actually got from Steve Nison because I was able to take a class for him when I was just getting started in trading. And a lot of his techniques, along with some of the other technical analysis tools that I picked up early on, again, over 30 years ago, have shaped a lot of my trading and how I view trading. And this quote in Steve's book is buried deep in the book. And I think he almost should have made it part of the title. So it's not something you're going to get from ChatGPT because it's buried. You actually have to read the book to get this quote. And the quote is essentially that the charting techniques in the book are suggested. I think a lot of people come to technical analysis and think that there are hard and fast rules and that it's going to work 100% of the time or 95% of the time. And it's one of the reasons that people fail when using technical analysis. You have to combine technical analysis with good money management, good stops when the patterns don't work out. And what I want to do today is go over a little bit of nuanced technical analysis. It's a couple of trades that I've made videos on recently. One is the volt trade. Another is a reversal trade. And I want to show you how they played out and provide, again, a little bit of nuance around technical analysis that doesn't necessarily fall within this is the setup, this is the rule, and this is how you play this trade out. One of the trades that I'm going to go over does meet that criteria and plays out exactly the way it should. And another plays out a little more subtly. And that's what I want to go over today on this chart, which is the S&P futures. There was news yesterday, which was Friday the 27th, around tariffs. Shocker. So we had a sharp move lower. And again, one of the trades that I have done a video on recently is the volt trade, which is catching something that's falling rapidly and figuring out like where the spot is to get into it. What I'm looking for in that trade is a waterfall like move. So a rapid move lower with volume. We got this spike down on the 2-minute. And so when I see that spike, and this is what I did Friday, when I saw this spike, I flipped to my 1-minute chart and here's that spike on the 1-minute. What I want to point out is that this happened and it wasn't the magnitude of a spike that would meet my volt trade criteria, right? It's a move lower, yes, but it's not something that I want to grab this bar because in that volt setup, I talk about buying the long tail bar on a spike lower. This isn't enough of a spike for me to grab this trade, even though you got a spike in volume. I'll put volume on here for a minute to show you that spike. You get the spike in volume. You got a spike in Q volume and SPY volume. Like I said, this is the futures volume. There was a spike, but it's not a waterfall lower, right? It's not enough for me. Again, this is sort of a nuance of technical analysis, but I went to the 1-minute chart, looked at that. This is not a trade that I took here. Again, because the size of this wasn't big enough. But then just a little bit later, about 10 minutes, we get another spike and we get this bottoming tail. And this is a trade I took. And here's where the nuance piece comes in. When we moved lower, we spiked down to here, right at 6,210.28. We go to that same level a few minutes later, we have another bottoming tail here. And so what this is doing, and it's a 1 minute chart. So this is I'm looking for a scalp on this chart, is set up a support area, right? We get the spike below. And the reason I took this trade long above this bottoming tail is because we had sort of a fake out, right? We get a move through. So it looks like we've broken support, and we immediately turn and go right back into this small range that's set up. This is a trade I like, being long here, moving back into the range, because you have a really good chance of heading back to the top of that range. Again, a scalp trade, not looking for a massive move higher. But this bottoming tail, I don't like. This bottoming tail, I like a lot better because of what I just told you, right? Through support, back into the range, long here. And again, looking just for the top. We don't get then the volt trade, which I like to do on a 1 minute chart, because we base. For the volt trade, I want this to move straight down, and it doesn't, right? It stops, it bases, we move sideways. It kind of, that erases my volt trade. My setup is gone. My suggested possible trade is not setting up at that point. So for me, I flip back to the 2 minute chart, and here's where we are. Here's that base. I'm going to take volume off now because I put volume on for that volt trade. So I'm just going to take it off so it's not distracting. And I'm going to show you the next trade that I liked. And that came here at around 240. You had two bottoming tails in a row, and then a move higher with this power bar, this green bar. What I like are the two bottoming tails here. And then the spike above both tails. So those tails indicate a possible reversal. They're not tweezer bottoms, meaning they don't come to the exact same price, but they're pretty close. And then you get this power bar move. This is another trade that I took for a scalp. And then the next trade is this kind of double bottom trade that you have set up here and here. And this goes to, again, that suggested that these technical analysis tools are suggested, and they don't have to be perfect, right? You don't need a double bottom that goes to the exact same price. It's close, right? A lot of technical analysis is showing you a pattern that if it's close to the pattern and not to the sort of letter of the law, but it's close, then it's a pattern that's there and being pointed out in technical analysis for a reason, right? This bottom shows that this trend lower is weakening because the bottom is just about at the same spot. Look at these bottoms. Here we have a bottom. We move down. That's not the same level. We move down. That's another level down. We move down. Now we have another bottom here. These aren't at the same level in price, and they're not showing a weakening trend. This double bottom is showing a weakening trend. Even though, again, it's not perfect. Perfect double bottom is going to come to this same price. What's this low? 6,184.86. That should be the low here. And this is 6,183.11. For a perfect double bottom, it's going to be the exact same, right? Not perfect, but still suggesting that this trend lower is ending. And here's what I like about this double bottom is that you get these bottoming tails here. You get another bottoming tail here. So when this candle clears this tail, this candle with the bottoming tail, it's also clearing these bottoming tail candles, right? So you're clearing the entire double bottom when this moves higher. So this is a trade that I took off the bottom here, even though it's not a perfect setup, right? It's a suggested double bottom. And then that flows very nicely into my reversal trade. This is a trade that I did a video on that has a lot of views. I know a lot of you have seen this video. A power bar off the 20 that's turning higher. You get a base that sets up here. Really well defined, tight base. Again, a little bit of the nuance around, what I'm looking for in my technical analysis patterns. A tight base, and then a move higher off of that, right? This is the buy. This is your stop. Buy triggered, stop here, and we get a nice move into the close. So again, a little bit of nuance in these trades, breaking support and then moving rapidly right back into a range. This semi double bottom, buying above that, right? As we break this small range set up by these bottoming tail candlesticks. And then this really textbook trade here with the power bar, the base, and a move higher, the reversal trade out of that. So if you get discouraged with finding these setups and you're having trouble seeing them in real time, it took me a long time to see the patterns that are setting up daily. And it just takes practice and seeing them over and over. It's one of the things that I'm doing right now. Before I filmed this video, I was using the replay and TradingView, going through the patterns, seeing what I missed, maybe where I should have gotten long or short, but I didn't on Friday, and just constantly cementing those patterns that I'm looking for into my head, even 30 years later. So find your setups, look for patterns playing out that match or are very close to your setups. Keep your stops, because even though the patterns work a large percentage of the time, there will be times when they don't. And remember, they're suggested patterns. They're definitely not going to work all the time. And as I told someone in the comments to one of my videos, trading is not a destination. It's completely a journey. You're going to be learning and applying and reiterating for the rest of your trading life. I'm still doing it 30 years later, still learning new things, still working on the psychology, and still on that same trading journey, along with the rest of you guys. So I hope this video helped. You can check out my Volt video. There'll be links to that and to the trade reversal video in the description to this video. If this was helpful to you, please hit like and subscribe. I'd appreciate it. It helps me to know what kind of videos to make to hopefully help you guys out. Ask questions in the comments and I'm happy to answer those. And thanks for watching.